Let's get more on this now with Tim Waterer in Sydney. He's Chief Market Analyst at KCM Trade. Welcome back to the programme, Tim. Now, firstly, what caused the precious metals to pull back so sharply from those record highs that we saw just a week ago?
Nice to be with you again. I think it really is just a case of profit taking after what has been parabolic gains for the precious metals. I think the sight of gold trading north of $4,500 and silver above $80, that was enough to tempt a lot of investors to take profit ahead of the year-end timing as well. So there is a seasonal element there as well, with traders wanting to lock in profits. Now, added to that, of course, this time of year, markets do tend to be a lot thinner in terms of liquidity, which can exacerbate some of the price moves. And I think that's what we saw yesterday with the moves that you mentioned. And of course, there is another element, which is that the Trump-Zelensky meeting appeared to go pretty well in the White House. So it looks like things are still on track potentially for a peace deal regarding Russia-Ukraine. So that's just sapped gold and silver of a little bit of safe haven demand.
Right, and what has been supporting prices recently, especially when it comes to silver?
So silver, it's really a case of the supply side dynamics really favouring it. There's an expectation there will be a supply shortfall next year and in the years ahead of that, as there is growing robust demand from EV, solar and AI production as well in terms of chips. So there's a concern that maybe demand won't be able to keep up with the growing demand picture. So, and of course there are some worries about how China's intent to apply some export restrictions starting January 1st, how that could impact the global silver supply chain. But I think broadly speaking, we are expecting further US rate cuts in 2026, and that's helping both gold and silver from a yield perspective, with traders seeing the two precious metals as a good bet in terms of a storing value when there are concerns about debasement of currencies with interest rate cuts potentially on the way and growing debt as well. So a lot of positive tailwinds for the precious metals heading into next year, despite the price activity we saw yesterday.
And looking at equities, the tech sell-off is continuing as we end the year. What's the sentiment over there?
That's right. I think there is a seasonal component there as well. Year-end position squaring. Now, we've had the S&P 500 up around 17.5% this year. Now, compare that to the tech-heavy NASDAQ, which is up around 21.5% this year. So the tech stocks have been the outperformers in 2025. And I think that's why they're seeing a little bit more profit taking than other parts of the S&P 500. So yeah, I'm not reading too much into the moves we saw. I think it's just a bit of a natural reaction in the tech sector. You mentioned Nvidia, that gained 5% last week. So once again, investors looking to take some profit off the table as we look to wrap up the year.
Tim Waterer in Sydney, thank you very much for that analysis.